much for having me on.
Well, people are talking about higher inflation, geopolitical tensions, implications of gold on the market here. And, a lot of things changing, right? China with the talks of dumping U.S. treasuries. I know they came out and denied that. But before we get into any of that, I want to ask you about what's going on in North Korea. We recently had MSNBC and CNN reporters accusing Trump of being insecure about his masculinity. And is Trump taking this out on North Korea? And do you think a war with North Korea is more likely under Trump than another president, all other things being equal? Let's start there.
Well, first of all, I could care less what a little bunch of clowns, little prostitute boys and girls, the media have to say. And I call them prostitutes because they get paid to put out. They get paid by their corporate Johns and their Washington whoremasters. There's not a man or woman among them. It's a disgusting crew. And you're talking to someone who's been on with just about all of them. On Oprah a couple of times, used to be on the Today Show with Matt Lauer. And I have to say, he never once showed me his penis. I was on with Brian Williams, the guy that claimed he was in a helicopter over Iraq and getting shot at. I used to be on Good Morning America. I've been on all of them. And I have no respect for just about any of them. It's a freak show. So why would anybody believe them? That was on with, the whole list. O'Reilly, it's a joke. So anyway, what they say makes no difference to me. Number two, we don't think we're going to have a war with North Korea. And it's more the military-industrial complex selling more fear and hysteria. If the United States attacks North Korea, Kenneth, kiss South Korea goodbye. 35 miles from the South Korean border is a place called Seoul, South Korea, with a metropolitan area population of about 24 million people. It'd be wiped out in a second. Say goodbye to Japan. So no, it's not going to happen. And the reason that we hate North Korea so much is that they have a nuclear weapon. And the reason they got a nuclear weapon, they made it very clear. They said, we saw what you did to Libya and to Iraq when their leaders gave up their drive to get nuclear, and you're not going to do that to us. Look at all the countries that North Korea has invaded. Count them. How many?
None.
And how many has America destroyed? How many have they occupied? How many millions of people have Americans killed in wars based on lies?
So then, countless, right?
So what I'm saying is the United States keeps provoking North Korea, and it's been going on. What do we have, 38,000 troops on their border? We keep doing these massive military drills with these moronic names. They're drills to launch attacks, and they keep practicing. So that's what's going on.
Is there any reason to be scared of North Korea, though, with the threats and maybe just a dictator that is...
Again, I've heard this dictator. That's none of my business if he is a dictator. Hey, we got to get rid of that guy Gaddafi, I tells you. And that guy Assad, he has to go too. And listen, we got to get rid of that guy Hussein. And I'll tell you something else, Kenneth. I don't like those people running Iran. Hey, how about fixing the damn trains in New York? You been on the subway lately? Oh, look what happened at JFK. Hey, you folks over there drinking the water in Flint, Michigan yet? This whole country's falling apart in front of our eyes, and I got a bunch of little boys and girls telling me what they should do in another country, and I don't salute the troops. I launched Occupy Peace. I'm a close combat practitioner. I'm not a pacifist. If you try to attack me, I'll attack you first. But don't go into other countries that haven't threatened you in any way. Like Libya did nothing to us. They didn't do anything to America. But why did we attack them? Because you had a little lowlife of a guy called Barack Obama who said that, oh, we got to go over there because we have some interests and we don't like what they're doing to their people. There's a guy, what did he do? Play basketball, shoot pool? Could he fight? And again, the military in this country has not won a war since World War II. And I got these guys telling me what their next strategy is. Hey, listen, Kenneth, you got a business. I run a business. We survive by our successes. Show me one of their successes, and then they could shoot their mouths off and tell me about their next plans of attack that they failed constantly in. We're in Afghanistan for how many years? How many people have we killed there?
Countless years. The longest war. 17 years and counting.
Right. So anyway, that's the long and short of it.
Gerald, let's talk about geopolitical tensions. We heard recently that China is cutting back on their debt. And obviously they have $1.2 trillion in U.S. bonds that they hold. They're the largest holder of U.S. debt that is out there. They did come out and deny this, that they are cutting back on their purchases. But why wouldn't they say that, of course? They wouldn't want to signal to the market that they're going to be dumping their bonds because that would collapse the price of what they're holding. So that's not a smart thing. So we don't know whether or not they're going to be reducing their holdings or not until it actually happens. But the macro situation would indicate that they might want to reduce their holdings, especially if the US dollar continues to weaken. Now, obviously, an investment in a U.S. Treasury bond is an investment in the dollar. And if they're expecting the dollar to weaken, especially against their currency, it would make a lot of sense for them to reduce their holdings in U.S. dollar denominated debt. So let's get your thoughts on this.
Well, so more than that, you go look what's going on again with the China moving off the petrodollar. China buys more energy than any other country. And they're accepting, they won't pay for it in dollars anymore. They're paying it for it in yuan. But they're telling the Russians and the Iranians and the Venezuelans and even the Saudis who are selling them oil that, oh, you could cash these yuan into gold if you don't want the yuan. And China's buying up gold. And then we just saw Germany also saying that they're going to be accepting yuan as well for payment. But again, overall, it's still tiny. The Chinese reserve currency is not more than 3% right now around the globe. The United States first, the euro second, and China's way down there. But the trend is in its formation. And this could be the beginning of the end of the dollar as the world's reserve currency if this continues. And like you said, if they stop buying bonds, if they start dumping them, and as the dollar weakens, and the dollar is weakening, it's just hit a 3-year low, and I thought the dollar would get stronger. But now what's happening is that you see the central banks around the world are now raising interest rates, even though they're still not that high. So the pressure on the dollar on the medium to long term, and I'm talking long term only, within a year or two, is down. However, under the Trump tax plan, companies are going to be able to repatriate trillions of dollars that they have overseas. When they repatriate those dollars, that means they're selling that currency, and they're going to be turning it back into dollars. That will temporarily drive up the dollar, but only temporarily. So putting it all together, as the dollar weakens, this is very positive for gold. And as we saw gold moving strongly at the end of December and into the first few weeks of January, our forecast remains the same, and we've said the same forecast now for almost 4 years. And that is the gold has to break over 1450 and solidify over that number, and then it hits a Bitcoin bounce. It blows through to 2000. The downside risk of gold, as we see it now, is between $100, $150 tops. So the risk is very low.
Yeah, I mean, going back to what you were saying a second ago, governments want to keep people in fiat, and it really seems like the U.S. wants to keep people, or other governments and other foreigners, in U.S. dollars as well. And it does seem like they're going to have some problems doing that, especially just with the stated official debt approaching $21 trillion here. The U.S. is benefiting from the teaser rate to pay this debt off. And what is the implications of higher interest rates as people turn away from the dollar on the economy?
Well, higher interest rates, I mean, you take a look like at auto sales. You'll start seeing those going down. You'll start seeing a slowdown in real estate. And, it's this cheap money that's kept the economy going. But again, to put it back into perspective, even if they raise rates 3 times in 2018, that's a big, 75 basis points. And then when adjusted for inflation over the period of time they raised interest rates, since, 2006, it's still well below the rate of inflation. So we believe we can take some more interest rate hikes. However, it's going to start really hurting as well for the average person. And that is when you see what they have credit card debt now at record levels. You have student debt that's never going to be paid off. So even incremental increases for the average person are going to hurt. But the average person is not the equity markets. The equity markets in the United States, for example, 10% control over 90% of it. So and the rest of it that's in the lower classes, they only have on average about $15,000 into it. So all this could be positive for the equity markets, negative for the general economy, and hurt the average person the most.
Getting back to gold, our very own fusion analyst here at Crush the Street is saying 1380 as far as gold is concerned to be a very important number for gold to confirm higher momentum. You're saying 1450, but it sounds like gold is heading in the right direction to me. 2018 is confirming this move. And my fear is that this move higher happens in such a stealth way that most people ignore it and they're not getting into it until after it's in the news and after it's getting very hyped up, similar to the Bitcoin move. Nobody was buying it in 2015 when it was between $200 and $300 for the majority of the year, until 2017, the latter portion of 2017, when people were buying north of 15, 16, 17, almost $20,000. And I just, what are your general thoughts on gold? And is it going to be a stealth move higher here until people really start to acknowledge it?
Yes and no. It's, again, look what you talked about the crypto market. Look how it's crashing lately, because you're hearing from Ukraine, South Korea, China, Brazil. Governments are doing everything they can to ban it. And so that money that went into crypto, a lot of it flooded out of gold for a while. That's going to go back into gold. The 1380 mark is the level that we're looking at in terms of, it hasn't broken above that and stayed above it. But what we're saying, and so that is a critical point. But what we've been saying, again, now going on 4 years, is that for real strength to break through, we're talking about a Bitcoin bounce in terms of, like you said, it went from a couple of $100, up to the 20,000 range. For that kind of thing to happen, we're saying it has to strongly go over the 1450 mark. That's just our forecast. I mean, we could be wrong on it, but that's the way we're looking at it. So our outlook for gold is positive. And again, the downside risk is minimal. Unless, of course, there's, a really, all of a sudden, we don't see 3 interest rate rises, we see 5. Something like that in the States, that could put a damper on gold if the dollar becomes too strong. I mean, it's a very simple formula. The stronger the dollar, weaker gold. Weaker the dollar, stronger gold. And I just mentioned to you, look at the decline in gold, the dollar rather, and how quickly it's happened. And 2017 wasn't a good year for it. So we saw the increase in in gold that was followed the decrease in the dollar.
For the average person who's wondering, kind of on the fence as to what to do, especially if they need their funds in the shorter term here, like a baby boomer looking to retire, who's dependent on whatever number they're looking at on their screen. They don't have 20, 30 years to let this thing play out. I mean, what are your forecasts for U.S. equities?
Where's the markets going? Hit 26,000, are they going higher? I mean, everybody's looking for a correction. You look at the price-earning ratios, and they're at pre-1929 and pre-dot-com levels. But the tax plan that Trump has instituted, I mentioned earlier about repatriating money from these multinationals that have it overseas. Go back to 2004, when George Bush allowed the multinationals to bring back money cheaply. Where did it go? It went into stock buybacks. And that's where it's going to go again. And that's what's driving the markets up as well. The cheap money, stock buybacks, and merger and acquisition activity. Of course, they're way overvalued. A lot of people are concerned, but they have been now for over a year. And by the way, we did a 180 right after Trump got elected. And we said this rally is real. And people that know me for many years, I was very negative on the markets and thought that they would collapse. Is there going to be a correction? Yes, of course there will. Nothing goes straight up. But again, the global economy is doing better than most have anticipated. You're looking at, better growth in the United States, other than the average 2% that we saw for several years. So, there's some reason to believe that it will keep going up to a point. And you make the point as well. When I hear young people that don't know anything about anything doing day trading now, I see how risky it's become. And here's what we're most concerned about, and that is a geopolitical event. And that, we believe, is going to be a black swan event that's going to crash the equity markets around the world. And remember, a lot of markets grew a lot faster than the American market did in 2017. And the black swan event, the event that we're looking at, that we believe is going to be the most deadliest to the market and to humanity, is if Trump keeps, and Saudi Arabia and Israel keep trumping up the rhetoric about going after Iran. And that's what seems to be heating up, because Iran isn't Libya, they're not North Korea, they're not Iraq, they're not Syria. These are the Persians. They're not going anywhere, and they're not going to take any kind of attacks from the United States, Israel, or Saudi Arabia very lightly. So something like that, because what that'll also do is you're looking at oil prices flirting with the $70 a barrel. That'll jack oil prices up to well over $100 a barrel. And that will put a great strain on the global economies as well. So we're looking at more of a geopolitical event than an economic one at this time that could destabilize these overblown markets.
Points well taken. Gerald, just concluding here, you mentioned people day trading the market. Is that something indicative of a bubble? And I say that too because I'm seeing that all over the place right now in cryptocurrency. People are quitting their jobs to day trade crypto, and many have been successful over the last year doing this. But is it because of the rising tide environment that people are getting by in this? And are we seeing that in stocks as well? And is this something that we've historically seen in other times in history?
Yeah, no, it's definitely bubble attitude. There's no question about it. I've been around a while. And just to make it clear, I started trading gold back in 1978. I ran a $5,000 bet up to almost $750,000 back then. That was real money. And then I ended up losing all but $100,000 of it.
Wow.
Yeah. So, I know the feeling, and I know how you could get lost in it. And actually, it was probably the best thing that happened to me, because I then began the Trends Research Institute in 1980. And had I made all that money, I never would have gone into doing something else. But yes, when you have rookies playing the markets the way they are, day trading in cryptos when people can't even give a good explanation of what they are and why they have any value, you know that it's a bubble. And again, what we're seeing now going on in the crypto market and the recent declines of it, we were pretty positive on cryptos, but now that we're seeing how governments are taking the action against it, this is going to really, we believe, hit them quite hard if, and this is the big if the governments follow through on the actions that they're saying they're going to take. China, of course, will, but whether or not South Korea and other nations will is the if. But if South Korea really clamps down on it, because you're having so much action coming out of the Asian countries, then this could be really a big downturn in the crypto market. And a positive for gold, because that is this other, a lot of people are going into cryptos as a safe haven commodity because they don't believe in fiat currencies. But as we've always said, gold is the ultimate safe haven commodity. So you'll see a lot of money flowing back into gold that went into crypto.
Sure. Yeah, a lot of sound money people have been enriched because of cryptocurrency, and they're also believers in precious metals as well. So I think that's a positive thing. Gerald, I want to thank you for coming on my show today, Crush the Street. If people want to learn more about what you do, where would they go and what should they expect to find?
Well, they go to our website, trendsresearch.com, trendsresearch.com. We publish the quarterly Trends Journal, a Trends Monthly. We do Trends in the News broadcasts each Monday through Thursday, and we put out trend alerts each week. And really, in this world of junk news, this is the only place where you're going to be able to